Hello, and thank you for looking in on this short run through of the leisure sector in the Southwest. Given the fast moving times, this may well be a useful insight on where we are in November 22, but of course we're seeing quite a number of changes coming in week by week, sometimes day by day. These reviews, they're certainly useful in so much as there's no doubt that we all live and respond to the media age. It's brought about a faster pace of change that we're seeing across all of our industries. At a point where the challenges are well reported and in some instances the impact is self-fulfilling, careful consideration is needed. And this of course is after a period of activity that no one would have predicted over the past 2 years. So first I want to take a little look at the operational market, the experiences for business owners and staff and customers in the hospitality sector. It was well reported that 2021 was a record-breaking year for businesses across the Southwest, and particularly for those outside of the cities. There was high occupancy for the accommodation providers and the positive impact this knock-on would give to the food and beverage market. So suffice to say, the consumer did bounce back against all restrictions, and they had the freedom to spend some quality time with friends and family. So as we entered 2022, the mood in the sector was one of quiet optimism, many recognising that really they wanted to benchmark trading back to 2019 just to get a sense of how normal things could be. The first quarter of the year was pretty positive, good start to the year. Foreign holidays were of course back as an option, and whilst there was a wonderful mess at all the airports, and that was probably helping those that hadn't made their decisions perhaps stay local and stay in the Southwest. The biggest impact really was the outbreak of war in Ukraine, and it was evidently clear once again that business owners had to carefully plan their offer, their pricing and their expenditure. So many in the sector reported a drop in bookings after Easter and a return to the last minute breaks rather than the race for space that we'd all seen the year before. Suffice to say, summer was always going to look after itself, but even during the season, the operators are keeping an eye on what's coming up, and they were reporting a slowdown in bookings for autumn and winter, and we've certainly seen this continue, and I think it will be this way for some time to come. So as Britain was enjoying a return to hosepipe bans not seen since the 70s, many of the other well-reported challenges were presenting themselves, and this was at a time when government support was being pegged back and loans were starting to need to be repaid. The swift impact of rising costs is now the #1 concern for business owners, and none more so than in a sector that relies on customers wanting to spend on goods and services that are ancillary to their annual budget. Food inflation, high, we all know this. The energy crisis, we're all looking at this, but ultimately in the hospitality sector it is leading to a perfect storm. Business owners just simply cannot afford to pass on the cost to customers, and pricing whilst it will lessen the blow with a little bit of government support, particularly on energy, it doesn't really account for the price increases that have gone on so far. The only way to break this situation is by government intervention and support, and there was nothing really much that came out of the mini budget, and the industry at the moment really has nowhere left to go. The pace of politics, or at least the Conservative Party front bench, has accelerated, although as of today we are looking at perhaps a bit more of a settled government. I'm sure that the calls for a general election will get louder, but I think we sort of got through the worst of the storm, politically at least. So what are the impacts on the commercial market for holiday parks, pubs and restaurants, and of course hotels? As we've previously reported, the leisure sector in the Southwest overall has defied general expectations, and transactions across the various subsectors have actually been quite strong. There's certainly a swing for demand of pubs and hotels under £500,000. These really is led by buyers coming into the sector for the first time, equity release from the housing market, and a desire to head west to run their own businesses. That's not something we've really seen since the credit crunch. Allied to that, the group market has been particularly strong. These are for larger deals over sort of £1.5 million, albeit I suppose the leader of the pack was the holiday park market, and that has cooled a little over the past few months. What has been quite telling, though, is that this general activity, whilst it did stall when Russia invaded Ukraine, when it did return, the private market was much quieter. I think most people had sort of satisfied their demands if they were going to make a change of career, lifestyle and location. It was really, we've been left with the group purchases in the main. So just a little look at the notable sales over the past few months. This will include St Ailsa Brewery, who've had 3 acquisitions this year to date: the Wellington Hotel at Boscastle, the Beaver Inn at Appledore, and more recently the Blue Ball Inn at Countesbury on Exmoor. They have been slightly quieter, I suppose, of the other Southwest brewer, that being Hall & Woodhouse in Dorset. They've made 7 acquisitions to date. They both are tending to look for very similar stock, and that ultimately is sort of good locations within good locations. We've got a new entrant as well to the Southwest market, and one to watch. That's the Coaching Inn Group, which is a subsidiary of Redcat Pubco. They've picked up 3 trophy assets: the Swan Hotel at Wells, the Moorland Hotel at Haytor on Dartmoor, and the iconic Jamaica Inn at Bolventa. They tend to sort of straddle the pub and the hotel sectors, I suppose, in terms of trading style and size. In the holiday park market, the race for space has slowed a little, as I mentioned earlier, and the deal that kicked it all off, which was the acquisition and then future share, I suppose, between Bourne Leisure and the American investment vehicle Blackstone, that's taken an interesting turn, with the original family ownership taking back the Butlins sites, and Haven and Warner remaining under a joint ownership for the time being. Regionally, Halfon Group, they've sold 8 parks across South Wales and the Southwest to Royal Resorts, so there certainly is still some activity, but perhaps not to the extent that we were seeing last year. If we look at our agency business, we've certainly seen an increase in clients looking to make a change, albeit, I suppose, over the last 6 to 8 weeks, a number of them have held back going to the market, feeling as though times are tightening and perhaps they won't achieve a sale, and have come a little late to the party. Just want to see what happens over the winter and how things settle down more into sort of second quarter of 2023. We are seeing predominantly longer term owners looking to make moves. I think the sort of the 3 to 5 year business plan guys are sort of waiting to get well out of COVID, through the energy crisis, before they might well be able to crystallize any returns. You know, they need to get their business to maturity, which is quite hard at this time. Many, of course, have predicted again that there'll be more stock available, and whilst this currently isn't the case, you know, I appreciate we're all seeing weekly pub closures. It will be sort of first quarter of 2023 whether we'll see that leads to many pub disposals. So talking of the future, we turn our attention really to what's ahead, and I think it will be a case of who's planned best for the worst. What has been encouraging is business owners will look to take advantage of a market with low stock and high demand, although we are starting to see that change as we're seeing that slowdown in demand. If we break down the 4 core sectors, holiday parks, they've seen record highs in terms of pricing and a high level of transactions. New owners will be looking to make those improvements and push for higher returns in the longer term. And this sector has settled down, albeit still some demand. Restaurants, and particularly high street, they have been in flux for many years. We've seen the continuation of the growth and the retraction of brands, and we do expect this to continue. A high street shopping centre venue will need, or does need, to be fully open and staffed, ultimately to attract trade, but covering all of those costs when you have to be open all day, every day. Given the higher energy prices, that's a sector that is under even more pressure. In the hotels side, we've seen significant realignment in the past 20 years. Many are better placed to choose to flex their winter opening, and the choice of budget or luxury is now established. We expect many resort hotels may return to traditional periods of closure during the winter months. That is actually a little bit of a shame. You know, if you think of Devon and Cornwall, that feels a step backwards, but may unfortunately be necessary to offset the energy price increases. Not something the branded operators can follow, of course, and I think there may well be a sort of a stalling generally in the growth in rate and occupancy across the region, which could, of course, have knock-on consequences. Moving to the pub market, seen a nationwide estate reduction of over 20% since the turn of the millennium, and this endures to face all challenges. Now appears to be following the hotel sector to a certain extent. Larger venues, good locations, and then venues with a simple budget offer maintained, but the middle ground is very challenging. So in summary, we anticipate more activity in the restaurant sector. Some may well be lost to alternative uses, and those that are clustered together to continue, albeit new brands coming through. We think pubs will certainly feel the pressure in the village freehold market. Hotels we expect to maintain, and holiday parks to commence or stall on growth, pending their owners' ability to fund investment in tougher times. So as we stand here today, it's difficult to gauge pricing. As stands, there's no urgency to buy, and this alone will potentially force price for those that are keen to exit sooner rather than later. And certainly from a buyer's perspective, there's probably more evidence to sit in your hands and wait it out and see what happens than there is to make too many decisions right now. And ultimately, we're heading into a market based on goodwill. Established businesses will continue to see customer support, and this isn't just for the operators of all of the hospitality sites, but our own business, and I'm sure the same for many of you that are watching this. Thank you very much for listening, and if Vickery Holman can be of any assistance to you or your clients, please just drop me a line. Thanks again.